A very good afternoon to all my dear students and welcome to the lecture of Financial Management SY BBA Semester 3. In the last lecture, students, we concluded with the chapter of your long-term decision making, that is long-term investments, capital budgeting. I also shared the notes in the Google Classroom. I hope you all must have received it and you all should start preparing at this time because we'll be having the quiz for the same in the next week, right? The date will be announced in the Google Classroom. You continuously check it for the further updates, fine? Now today students will be starting with my next part, that is unit number 4, that is working capital, cash and receivables management, right? We have completed with the second unit. Now the fourth unit which I am going to start, that is comprising of 3 steps, fine? That is again working capital management, you can see cash flow management, and the third is your accounts receivable, that is receivables management, fine? So again a chapter with lots of interesting facts. You all know about accounts, whatever you have studied about current assets, current liabilities, cash, bank balance, bank overdraft, bills receivable, bills payable. So all those you need to study about the system, right? You all are aware about the concepts and how it actually works in business, that you will study in this particular unit, right? So today students will be starting with the first part of it, that is working capital management, right? First of all, what you need to study in this entire unit, students, it is having the weightage of 25%. You will study the meaning, factors affecting working capital management. This is the very first part that you need to study. Operating cycle, cash cycle and determination of working capital requirements, right? So you need to study first of all the concept of working capital, as we all know the basic meaning of it, right? What is it? Current assets minus current liability. But then too, it also in depth you will be studying what is the importance of it, what are the types of it, fine? Then the next is your cash management. The second part is related to entirely receipts and payments of your cash. How cash is received from which sources and for which sources you need to pay it, right? What are the application of funds? And the last part will be, you will be studying is receivables management, fine? So again a lengthy chapter, but it is very easy to understand because majority of the things are already clear to you, fine? So we will be starting with the very first part of the unit, that is working capital management with it today, fine? So students, working capital management, as I told you, you all must be aware that working capital is your current assets minus current liability, right? That is true for your accounts basically. But when you are studying financial management, you need to study various aspects of working capital, fine? So we'll be going through one by one what do you mean by it and what are the types of it, fine? So now to begin with, students, any type of business needs mainly two types of capital, right? That is fixed capital and working capital. Our chapter is concerned with working capital, but knowing both is very, very important, fine? What do you mean by fixed capital, students? Fixed capital, to brief it, it is invested in the fixed assets and the capital expenditure, students, right? Those capital which is invested either in fixed assets like land, building, plant and machinery, maybe furniture, is known as fixed capital, fine? So again the entire part which remains fixed for a period of years, that is your tangible assets or fixed assets, is known as fixed capital, right? The second part of it is your working capital. What do you mean by working capital? The capital which is invested in current assets, right? Now as you all must be knowing, what do you include in current assets, students? Current assets mainly includes stock, debtors, bills receivable, cash, bank balance, so on and so forth, right? So all those things comprises of your working capital. Now in order to keep the fixed capital intact, right, again working capital is necessary. Why? Because the money which will come from working capital will only be allocated in fixed capital investment, fine? So I suppose now you are clear again with some idea regarding your capital. So mainly we can divide our capital into two parts. One is your fixed capital, second is your working capital. Now again, in order to keep the fixed capital working capital is essential, as I told you, right? Again, it is the adequate working capital which keeps the wheels of the business running, right? Because in layman's language, working capital we can say is the capital which is used in routine, right? Day-to-day expenses, day-to-day income you are having with you may be related to your business, that is operating incomes, again bills receivable, bills payable, creditors, debtors, stock, purchase, material, etc. So all those things things are, if adequate working capital is there in the business, then the business can keep running, otherwise it can come to standstill, right? That is why most important thing is working capital is known as the lifeblood of the business, right? So again, as blood is very much important for the life of human body, working capital is again very much important for the business. Fine, so I suppose it is clear now with the introduction part to all of you. Working capital more or less in amount is harmful for business, right? Working capital should be in adequate amount only. If it is less, then there is scarcity of it. If it is more, then there is an excessive blockage of capital in the business, right? So both are not good. It should be in appropriate amount. Therefore, to keep the total working capital and its component parts at satisfactory level, its proper management is much more important, right? That is why we are studying students working capital management. Fine. So again, components of it are your current assets and current liabilities, right? Maybe your cash, maybe your debtors, maybe your finished goods, maybe your raw materials, maybe creditors, again maybe bills payable, bills receivable, so on and so forth. So all those are your components of working capital. Fine. I hope it is clear to each and everyone. You all must be clear with the introduction part of the working capital management chapter. Fine. So moving on with the next part, what are the types of working capital, right? Generally, which two types? We know generally the second concept, that is net working capital, that is current assets minus current liability. Absolutely correct in terms of accounts also, right? But there are mainly two concepts which are generally accepted. Amongst that, the first is your total or gross working capital and the second is your net working capital, right? So what do you mean by total or gross working capital, students? It means the total investment in current assets like stock, debtors, bills receivable, cash and bank balance which are needed in the business, right? So the term itself says it is total or gross, right? So total or gross means, in short, I can say gross working capital is equals to current assets, right? That is the first view which is accepted as working capital. Depends upon the firm which policy they are adopting to calculate the working capital, right? So our first concept says, what do you mean by total or gross capital? Total or gross working capital is equals to current assets, right? So sum of total current assets is known as working capital. I hope it is clear, right? Fine. Now from a point of view of finance manager, students, if we see that concept of total working capital is very much important and useful, right? Because he has to make adequate provision of total working capital and manage its components part efficiently. Fine. Now again, students, it is the responsibility of the manager to determine and maintain the optimum level of gross working capital, because optimum level is the level which is the most economical level, right? So this level should not be increased also, should not be decreased also, it should be maintained. Fine. So I hope you are clear with the total or gross working capital concept. Now the second part is your net working capital concept, right? Net working is the second part. It means total current assets minus total current liabilities. We all are aware about this concept, right? It indicates the short-term financial soundness, liquidity position and ability of the company to make timely payment of current liability of business. You all must be aware of current ratio also, right? That is current assets upon current liability. It is a part and partial of this net working capital concept. Fine. So again, here total current assets, students, includes your total of stock, receivables, cash and bank. Total current liabilities, it includes your creditors, bills payable, bank loan, short-term bank loan, interest on that and other expenses which are still outstanding due for payment, right? So if you deduct current liabilities from current assets, you will get the answer for your working capital. Fine. So again, therefore the concept we can say of this net working capital is much more important from the viewpoint of creditors and bankers, right? Why do they need it? For again, for the period of knowing the repaying ability of the company, right? So if they want to know the ability of the company, how much they are able to pay about their loans, about their EMIs, they need to calculate this part. Fine. Again, it also indicates the portion of total working capital to be financed by long-term sources. I hope it is clear to each and everyone, right? Now you all must be clear with the concept of working capital. There are two types of working capital, that is total gross, that is equals to current asset, and the second is net working capital, that is equals to current assets minus current liabilities. Fine. Okay. Now moving on to the next part. That is, again we can say working capital, students, is also termed as circulating capital, right? The another name of working capital is your circulating capital. Why it is known as circulating capital? Because it goes on circulating by changes its forms, right? It continuously changes its forms. We generally think that current asset minus current liabilities, that gives me working capital. So for a layman, working capital is equals to cash or bank balance only, right? But as a finance manager, it continuously changes the forms, and we need to see the various forms which are included. Fine. So we'll understand the entire concept of circulating changing capital with the help of this operating cycle. In the later part of your chapter, operating cycle is to be dealt in detail, but here for your understanding we are looking to this cycle, right? Fine. So how does this cycle works? As you can see in the diagram, the first itself is your cash. Now cash is converted into raw materials. Raw materials is again converted into work in progress, that is production is going on. Work in progress is again converted into finished goods, and finished goods are sold to sundry debtors, right? And then debtors are converted into bills receivable. Again, bills receivable are encased and they are converted into cash, right? So this is generally known as operating cycle. So we'll understand this in detail, right? Again, how does the cycle starts? In the beginning, students, we receive working capital in form of cash because we are starting the business, suppose, or we are getting certain funds from various sources. So we receive cash out of it. Fine. Now this cash is used for purchase of raw materials. Because we are into the production firm or we are into any service firm also, you need to purchase certain raw materials or certain products for your business. Fine. So this cash is converted into raw materials. Now this raw materials are processed. At the end of the process, we get work in progress, right? After certain processes, after it is completed, it is converted into finished goods. Now this finished goods is also the blockage of capital only. Fine. Now this finished goods is sold on credit, either on cash. If it is sold on cash, then it is converted into cash directly, right? But if it is sold on credit, then they are converted into sundry debtors. Fine. Now debtors comes into existence, students. By this debtors, they certain debtors pay amount after the debtors period is completed, or certain are converted into bills receivable, right? Now when this bills receivable is matured, this is converted into cash again, because we will receive the cash out of it. Fine. So I hope you all must be clear with this part. Fine. So as you can see in this figure, operating cycle of working capital continuously changes in different stages, right? And at each stage of the part, the working capital remains invested in form of either cash, or in form of either raw material, or either in form of finished goods, or either in form of debtors or bills receivable, right? So sum total of all these forms, I can say, is known as your total working capital, because this is completely your current assets. I hope it is clear, right? So this goes on circulating through different forms. So as long as your student circular flow of working capital goes on general health, the business continuously runs, right? If any disturbance happens in this cycle, then your operating cycle is affected, right? For example, take current situation of pandemic, that is COVID-19. People have invested in raw materials, they have ready stock, right? Some of them have invested in raw materials, but due to the current situation of lockdown, they were not been able to convert into finished goods, so their capital is blocked here. Some business were having the finished goods ready in their godowns or in their shops, but they were not able to sell it, right? Some may have sold it to the debtors, but they were not able to receive back the money because of the lockdown situation. So any point of time, any disturbance which takes place, then financial manager has to continuously maintain this cycle. Hope it's clear to each and every student. Fine. So now the next part you need to start is your factors affecting working capital. I hope everyone is clear with the operating cycle also. This we will study in the coming lectures in detail also. Fine. So starting with the factors affecting working capital, right? What are the main factors? There are n number of factors which affect the working capital of the business. Fine. So starting with the first factors affecting working capital, students, right? This all are your list of factors which affect the working capital, right? So starting with the first, that is nature or character of business, right? So all these factors either affect the increase in working capital or decrease in working capital, and how much it is the requirement, right? From that point of view, we'll be studying each point. Fine. Now, the very first you can see, students, is the nature or the character of business, right? What type of business you are into, fine? Either it is a manufacturing firm, either it is a service sector firm, either it is a company, either it is a sole proprietor firm, either it is a partnership firm. So what type or nature of the business is there affects the working capital, fine? Amongst that, we will see, students, public undertaking need very limited working capital since they offer cash sales only, right? Those undertakings which are into the cash selling only, right? You may have various kinds of business, fine? Some may run on cash basis, some may run on mercantile basis, right? So those who are running only cash sales, fine, so every day they are selling it and they are receiving the cash. So from the entire operating cycle, your debtors and bills receivables are again we can say reduced, fine. So immediately your stock is converted into cash, so your daily working capital requirement decreases, fine. Now trading and finance firm, right, they requires less investment in fixed capital and will have more investment in working capital, right? Those firms who are trading generally, they are not into manufacturing firm, right? For example, if you are having into a manufacturing firm, you require a sizable investment of, again we can say, fixed capital and working capital, right? Because you need to invest more in your machineries, factories, plants, fine, and then you need to again purchase the raw materials for converting your finished goods into the sellable condition, fine. So for all that you require equal amount of fixed capital and working capital. If you are into the trading and finance firms, right, then again you need to invest more in working capital because your fixed capital remains up to a limited extent only. For day-to-day routine activities you require working capital. So nature or the character of the business is the very first factor which affects the working capital. Second, students, is the size of the business or scale of operation, right? What is the size of the business, whether it is small or large? What is the scale of operation? That also affects your requirement, fine. Working capital requirement is directly influenced by the size of the business, right? More the size of the business, more will be the requirement of working capital. I hope it is clear, students, because as such your business is large, then your operations will also be large, right? So for operating such kind of operations on a very large scale, you require much more capital. In some cases, even small concerns may need more working capital due to high overhead charges, that is high charges regarding overhead, maybe your admin overhead, it may be your selling overhead, it may be your office overheads, it may be again your prime costs, right? So for all that, again inefficient use of available resources and other economic disadvantage, fine. So suppose you are not allocating or using the resources properly, that may also lead to increase in requirement of working capital in small firms even, fine. But generally we can say it is directly related, right? The size of the firm is directly related to the requirement of working capital. Larger the size of the business, larger the requirement of working capital, and vice versa, fine. So first was nature of business, second is size of business, third is production policy, students, right? How production policy affects working capital, we'll see. The production could be kept either steady by accumulating inventories during the slack periods with a view to meet high demand during the peak season, right? The production could be curtailed during the slack season and increased during the peak season. If the policy is to keep the production steady by accumulating inventories, it will require higher working capital, right? Now, how does it affect students? Many firms are such that they accumulate the inventories, stock during the slack period, right? Now, for example, just now slack period is going on due to current pandemic situation. What many firms will do, they will accumulate all the inventories with themselves. They will start production for it, right? And then after this period goes, then the whenever inflation period or high demand during the peak season will be coming, right? Because the festivals are coming in the coming months. So what they will do is, they will accumulate inventories right now and then they will utilize this inventories to be sold in the coming future period, right? So such kind of accumulation of your materials leads to higher requirement of working capital because my cash is converted into raw materials right now, right? And that raw materials will be converted into finished goods and then debtors and then cash after certain period of time. So right now, if my production policy is to accumulate the inventories, working capital will increase, fine. So my requirement for it will increase, right? Again, certain people can do that if my production can be curtailed right now. So what I'll do is I'll not purchase any new inventories right now, and I will purchase it in future time period. So that will lead to my working capital requirement decrease right now and then increase in future period, right? So in crux, it will be, if the production policy is to accumulate the inventory during slack period, the current requirement will increase. And if it is to curtail the production right now, then current working capital requirement will decrease. I hope it is clear, right? So students, we have seen till now 3 points: nature of business, size of business, and the third is your production policy. Now the next is your manufacturing process or length of production cycle, right? What is the length of your entire production cycle? How much time it takes to convert your raw material into finished goods, fine? In manufacturing business, the requirements of working capital increase in direct proportion to the length of manufacturing process. The raw materials and other supplies have to be carried for a longer period of time, right? As I told you, suppose my production is such, my business is such, it takes around 5 to 6 days to convert my raw material into my finished goods, right? For example, take textile industry. You have to convert everything starting from your yarn. If you are having a textile firm, yarn is converted into then cotton is again converted into some of the raw materials, that is your, again we can say, semi-finished cloths. Then cloths is again going into dyeing, printing, then again from that ready-made garments are made, that ready-made garments are again sold in the market, right? So entire process takes a longer period of time. So longer the length of manufacturing process or production cycle, longer it will take to convert my working capital, right? So the direct proportion, longer the length, higher the requirement of working capital. Shorter the length, shorter the requirement of working capital. Take for example of your automobile industry, right? Suppose you are into the manufacturing of car. So manufacturing a car, you require higher working capital, because in order to sell the goods, that is your final product, a car, it takes a longer period of time, right? So for that, your working capital requirement will increase. So directly proportionate, right? So students, you just need to keep in mind whether a particular factor increases the working capital requirement or decreases the working capital requirement. And the second is, either it is directly proportional or it is indirectly proportional, right? Now the next factor is your seasonal variations, right? Seasonal variation, what do you include in that? In certain industries, raw material is not available throughout the year. The raw material is bought in bulk. Huge amount is blocked in the form of material inventories during such season, demanding more working capital is required, right? Take for example of a beverage industry, right? Who are making your mango juices. Now mango is available for a particular season only, right? For either we can say 4 months or 5 months during summer. So what this, again take example of your fruity, right? So Parle Fruity is one of the company engaged in the manufacturing of your mango juices. That is Slice is also one of them, fine. Again Maza is one of them. So what all these companies do is they purchase the mangoes in bulk during the summer season. Then they convert it into the fruit pulp, and then they use this fruit pulp with added preservatives throughout the year, right? Because manufacturing is continuously done for 365 days round the clock. So at a particular season of your summer for 4 months, the actual requirement of working capital increases, right? So that's why it is said that the seasons demanding more working capital. During this season particularly, we can say summer, the requirement of working capital increases because they need to purchase more and more raw material. For them, mango pulp is one of the raw material, right? So understand this with the help of examples. So during the seasonal variation, for example, take of your rainy season. So those firms who are trading in either rainy seasons, that is your we can say raincoats and umbrellas, before the rainy season starts, they start purchasing all these materials and then they sell it during the entire season, right? So for a particular seasonal variation, they are increasing the requirement of working capital. So for that, it is their raw material or it is their finished goods which will be sold again to another distributors or the retail customers, and then it will be converted into cash, fine. So seasonal variation is also one of the factor which affects the working capital. Next is your working capital cycle, right? What is working capital cycle, students? We studied just now only, that is operating cycle in brief. In manufacturing firm, working capital cycle starts with the purchase of raw material and ends with the realization of cash from the sale of finished goods, right? We saw just now, students, that your manufacturing cycle starts with the purchase of raw materials. We started with the cash is converted into raw materials is converted into finished goods then debtors then bills receivable, and bills receivable to cash, right? So again, working capital cycle, what is the length of it, how much time it takes to convert your raw material until the finished product and cash is known as working capital cycle, right? So again, the speed with which the working capital complete one cycle determines the requirement of working capital. So if I say that entire cycle takes 10 days to complete, right? So again, I require much more capital because initially I have blocked my money on the very first day. After 10 days I will be receiving back those money. So for the period of continuous 10 days I require more and more capital, right? So if I am able to reduce the size of working capital cycle, suppose I take my working capital cycle takes 5 days, so I just need to block my money for 5 days only. After 5 days I'll be start getting money again in return, right? So longer the period of cycle, larger the requirement of working capital, students, right? So it is advisable that you have again a shorter manufacturing process time period, a shorter working capital cycle also. Hope it's clear to each and every student. So working capital cycle is also one of the factor which affects the again we can say working capital requirement. Then the next is your rate of stock turnover, right? Stock turnover ratio you all must have studied. How many times during a year particularly or during a period the stock is turned over. Now there is a high degree of inverse correlationship between the quantum of working capital and velocity in which the sale is affected. Firm with higher stock turnover will need lower working capital compared to the firm having low rate of turnover, right? Now what do your stock turnover ratio shows you, students? Stock turnover ratio shows you how many times the stock is converted. For example, if it is 10 times, right? So I can say during a period of year 10 times my stock is converted. So 10 times I have sold, for example, say my one time stock sale is 1000 units. So I can say if it is 10 times, then during a period of year I am selling 10,000 units of my product. So more the stock turnover ratio, more will be your sales and more will be your realization of your cash from your debtors, right? So the higher the turnover ratio shows you the lower rate of working capital which is required, because you are continuously receiving money from your debtors and from your bills receivable, right? So rate of stock turnover, it is inverse relationship. Higher the rate of turnover, lower the rate of requirement of working capital. Lower the rate of stock turnover ratio, higher the rate of working capital requirement. I hope it is clear to each and every student, right? Understand each and every factor with the help of 4 things I told you, whether it is inversely proportionate or directly proportionate, whether the requirement increases or decreases with this factor. Fine. Okay, the next student is your credit policy. What do you mean by credit policy? Again, credit policy is the time period for which you are receiving the money. Suppose you are purchasing from certain person on credit, right? So he or she will give you certain time to pay. Then he becomes creditor of us, right? Suppose he gives the credit period of 30 days. So if today as on I am purchasing on your 16th of July 2020, so I need to pay them on 16th of August 2020, right? So I am receiving a credit of 1 month. So that if I am not paying it itself forms my working capital, because my cash is not reduced but my raw materials are increased, right? So credit policy of a concern of a business means how the firm deal with the debtors and the creditors. Concern purchase on credit and sells its products on cash require less working capital. Why? Because if I am getting my purchases on credit, I do not need to pay the money. But if I am selling it on cash, I am immediately receiving the money. So payment is less and receipt is more. So that will ultimately lead to working capital requirement equals to less, right? If the concern buys his requirements for cash and allows credit to its customer, will require more working capital since huge fund will be tied up in debtors or receivables, right? Say for example, I am purchasing of 100 rupees on credit, but I am selling it to debtors for 50 rupees cash, right? So 100 rupees credit also I received and 50 rupees cash also I received. So I am having a net effect of 150, right? For example, if I am paying 100 rupees to the creditors, but debtors I am giving 200 rupees credit for my sales, right? So 100 rupees I have already paid, but 200 I will receive after a certain period of time. So that will lead to again blockage of huge working capital in a firm. So that vice versa depends upon the policy of the firm, that is known as credit policy, either credit given or credit received. Fine. I hope it is clear to each and every student. Now the next is your business cycle, right? What do you mean by business cycle? Business cycle means to alternate expansion and contraction in general business activity, students, right? Generally you can see that many a times the business or the trade cycle changes, right? Sometimes there is boom in the business, sometimes there is depression in the business, right? So all these trade cycles also affects the requirement of working capital. At present we can say there is a depression going on in the economy, right? Because your cash flow has reduced in the economy, the demand has decreased and the supply has also decreased accordingly, right? So this changes in trade cycle leads to changes in working capital. During boom period there is a need for more working capital due to increase in sale, rises in prices and optimistic expansion of business, right? Because there is increase in sale, you need to produce more. In order to produce more you need to purchase more, right? So for that you require higher capital. Suppose there are rises in prices, so you need to pay more. For paying more you require more cash, right? So again requirement increases, and if the business is to be expanded, then for that also you require higher working capital. Now during the depression the business contracts, right? The business reduces, sales also decline, difficulties are faced in collection from debtors, which is going on right present, right? At present also in pandemic situation the businesses are contracting, sales has always decreased, right? And again there is a difficulty in receiving money from the debtors in any type of business, right? All type of businesses are affected. Maybe you can take it as food industry, maybe textile industry, maybe diamond industry, maybe construction industry. So for all that they require again a large amount of working capital which is idle. They cannot invest this money further. Fine. So business cycle also affects your working capital. Again the rate of growth of business, students, right? So working capital requirement increases with the growth and expansion of business activity. More the expansion of business, more the requirement of working capital, right? So again it may be concluded that for normal expansion in volume of business we may have retained profit to meet working capital needs, but if it is a fast growing concern then large amount of working capital is required, right? For a certain period of expansion, for a certain again level of expansion, you have retained earnings in the business, right? It may be reserves and surplus, it may be general reserve, it may be profit and loss reserve, it may be capital reserve. So all kinds of reserves and surplus are used in retained time period, right? But in fast growing needs your capital amount of working capital increases. Fine. So rate of growth of business also affects the working capital requirement. Fine. The next is earning capacity and dividend policy, right? Again a firm that maintains a steady rate of cash dividend irrespective of its generation of profit need more working capital. What do you mean by dividend, students? Dividend is the rate of return which is going to be given to the shareholders or the investors for as a reward for the capital which they have invested in our business, right? So dividend is to be paid by the business every now and then, either maybe quarterly, either 6 monthly or either yearly, right? So if it is paying it in cash, higher working capital is required. If the firm that retains larger part of its profit and does not pay the dividend, working capital will be less, right? Definitely. Just keep in mind one logic. If you need to pay early, your working capital increases, requirement increases. If you need to pay after a certain period of time or you delay in payment, will lead to decrease in working capital, right? Similarly, if your receipt is high, working capital requirement will be low. If your receipt is low, working capital requirement will be high, right? So I suppose everyone clear with earning capacity and dividend policy also. And the next is your price level changes, right? The effect of rising prices may be different for different firms. Some firm may be affected much while some may other not affected at all, right? So if the rise in price level, the maintenance of working capital is more, right? You can say for example at present inflation is going on, the prices is increasing day by day, right? Say for example fuel charges, fuel expenses of petrol and diesel is increasing day by day. So higher the prices of the fuel, it will more directly affect the transport business first, right? So they have to pay more every day for the same activities they were going on again through years, right? So for that they require higher working capital. If price level decreases for a particular raw material, for a particular material, then the working capital also decreases, right? So directly related. I hope it is clear. In the last is your other factors, right? Other factors like your operating efficiency of the business. You have import policy also, right? Depends upon the import policy of the business of the country. Asset structure, what kind of assets you are having, more of fixed assets, more of current assets, so that also affects the business of working capital. Banking facilities, whether the bank loans are available easily or not, whether bank overdraft or cash credit facilities are available or not. If it is easily available, then working capital reduces. If it is not easily available, then you have to keep more working capital in the business, right? So I suppose you all are clear with the other factors also, right? So what we have studied is this 9 to 10 factors which are most important for your working capital requirement, students. Fine. So around we have studied 14 to 15 factors in detail, right? Again, the most important part which comes in your exam is your factors affecting working capital. If you logically understand it, the answer is very easy. Again, the conceptually if you are clear, then you can write it down. Fine. I hope it is clear to each and every student with all the factors. Fine. So what we have done today is, students, the concept of working capital, types of working capital, gross and net. Then we started with the factors affecting working capital. Fine. So I suppose this is enough for today's lecture. We'll conclude at this point. This is Professor Shaurya Shah teaching you Financial Management Unit 4 SYBBA Semester 3. See you in the next lecture, students. Take care of yourself. Have a good day ahead.